During the year 2016, Ernst & Young has conducted a global consumer banking survey on 55 consumers in 32 countries. The survey's aim was for them to determine what they thought about their current and future relationships with traditional banks. Based from that, they determined the relevance of traditional banks according to four factors: primary financial services provided by the bank, trust in the bank, mix of products in the bank, and future considerations. The result of the survey shows that from the previous 100% dependence of global consumers to the traditional banks, it went down to 75%. The survey shows that consumers find that multiple channels are required for customer engagement. 82% of consumers go online first to research a product offered by banks, but 59 of those consumers also need to speak with someone to get advice or take up a new product. The survey gathered 65% consumers who believe that having a digital presence is highly important, which 60% of them believes that having a physical presence of a bank is highly important as well. The survey concludes that the reason for this is because of how non-traditional banks compete in the market by providing better customer experience. 4 of the 5 reasons why consumers choose a non-traditional bank provider over traditional banks relates to better customer experience. The growth of technology and its exponential evolution continues to demolish the way the traditional banks do banking and continuously transform it in ways unimaginable yet. In the local banking sector, because of the rise of devices such as smartphones in recent years, it has revolutionized the financial services industry. It helps consumers to perform banking transactions and make payment anytime, anywhere at their convenience. It also provided faster and more efficient alternative means to reach a wider base of clientele, especially in the rural areas. BSP allowed banks to engage in electronic banking in the early 2000s. Today's most popular forms of e-money in the Philippines is smart money and Globe's GCash. The increasing use of e-money in the Philippines is exhibited by the continued rise of participating banks in e-money transactions.
Here are the problems encountered by today's banking sector. First is the lack of profit. There are numerous reasons why banks have failed to reach their expected revenue. One of it is because of bad loans, wherein banks lend their money to their consumers and after a certain period of time are unable to pay them back. Because of this, banks are unable to have enough return on investments or return of equity which meets their shareholders' expectations. For the local banking sector, according to the Philippine Star, 86% of Filipinos have no bank deposit. Although there are various reasons stated, it's been said that consumer distrust and not enough money as the main reasons for this. Second problem is cyber threats. Given in the growing digital age where banks have slowly adapted into making their data digital, attackers or malicious groups have found new ways in infiltrating systems, especially banks who are responsible in handling finances. An example of this is the RCBC Bangladesh heist scandal where hackers transferred around $81 million to 5 fictitious RCBC accounts. Another recent incident is the BPI incident where consumers' balances have suddenly changed with some doubling and some reaching the negative. It has been said that it was a system glitch. However, glitches like these, if not resolved, could be vulnerable to hackers also. Third is the increasing amount of identity theft and bank frauds. This happens because of banks' inability to identify and confirm the identity of their consumers, or criminals finding other means in obtaining money from the banks, which has taken a toll on both the banks and their consumers. According to CNBC, just in 2016, $16 billion was lost because of identity theft and bank frauds, and 16% increase from the previous year. Fourth problem that banks encounter is the increasing competition. Given that there are different innovations for technology in every industry, banks have encountered a strong competition in the rising cryptocurrency. With Bitcoin as their frontrunner, cryptocurrency have taken the attention of financiers and continue to rise and take away the same market that banks have. To add to this, banks have to operate under regulatory pressure of outdated policies that do not fit and have yet to adjust to today's digital age standards. Lastly is the culmination of all the problems previously stated, which is customer experience. With growing customer dissatisfaction and distrust from previously stated problems, banks must find a way to again attract their market and cater to the needs of their consumers. With today's increasing competition and continually progressing technology, customer expectations continually evolves with it. What is our proposed solution to the problems previously stated? Our technological innovation is open banking, which we will call BAPI. Open banking is the use of third-party application program interface or API to standardize data and make it applicable to other users of the same API. Through this, banks will be able to pass and receive information seamlessly. This will enable banks to maximize their resources and focus on their operations, while at the same time allowing third-party developers who use the same API to offer services themselves using information from the bank. This will improve the bank's information security and give them flexibility in offering services. This will also streamline the process and make it easier for the consumers.
Open banking revolutionizes the whole banking system, and for this to work, the system of current banks must be revised from top to bottom. Since a new type of technology is being introduced, customers would have to have a different way of how they interact with banks. Therefore, they should have to provide a new system, a new business process, and a business model. Similarly, since banks are the ones to offer this new technology, they themselves will have to adapt to this technology by introducing it to their own and to integrate it on how they currently transact and process it in such a way that would work from within the banks and out to the consumers. Banks would have to find CEOs that would be knowledgeable in technology in order for development of new process and models be inclined with the use and integration of technology. For traditional banks to transition, they would have to explore different ways on how they could digitize their transactions at the same time promote trusts between their customers and their new nation. They would have to think of ways on how they could secure their transaction from digital environment with a seamless movement of money between every product and services. Second, non-traditional banks would have to provide new services and new products for their new environment. For banks to survive while transitioning from traditional banking to open banking, they would have to have these new products and services that would help customers build their trust on them while creating new ways on how to help customers manage their money by utilizing technologies. Banks can use customer data that are currently present in their silos and transform those data into useful ones that would help them manage in creating their new products and services. By improving their drill-down analysis on their current customer data, they would be able to determine which areas of banking they could help customers with, and from there, build new products and services. Lastly, since open banking's main environment is the digital world, and for traditional banks to be considered an open bank, they would have to transition from the usual paper and pen transactions to electronic transactions. For open banking to be successful, they would have to provide an interface that is uniformly accessible across all devices. Not only accessible across all devices, but one that provides a sleek user experience that provides great information that will assist customers in choosing and knowing information regarding a certain product and or a service. Once the business process models of bank transform and adapts to the needs of the customers and an API is provided to cater user transactions, banks can now work on integrating their old data to new ones to perform a uniform format that would allow clean integration.
So how does open banking solve the previously stated problems? First, it's for the lack of profit. Open banking will give banks the necessary data to study consumer behavior and will know how to attract their market based from it. It will also maximize the resources of banks, lessening the costs as well as improving services. It can also use data analytics based from the information gathered by the API in making business decisions. Open banking solves cyber threats by storing information in a single place and encrypting the transferring of data. OpenAPI in itself already has multiple layers of security, but banks themselves can focus in making their security robust by enhancing it based on the standards set by the API. Third is for identity theft and bank fraud, which by open banking, transferring of previously provided data will lessen its occurrences. It will lessen the opportunity criminals will have to impersonate consumers. Fourth is the increasing competition. Through open banking, banks will be able to offer services that they themselves couldn't provide before through third-party developers. Through this, they will be able to know their consumers more, and it will allow them to keep up with the latest technology and have real-time or online services. Lastly is for the customer experience. Customers won't need to repetitively enter previously provided data, and they themselves could choose which services they wish to avail. Banks also can model their services based on the data gathered of what consumers want and need.
So for this system, the team decided to develop it in 5 years. So for the first year, the team decided to focus on developing a customer-centric business model. So the proponents, which are the software, hardware, network, and database, we are just going to focus on researching what are the right software, hardware, network, and database that will fit perfectly for banking API. And we are going to see some current available APIs and see what the features of those would still be applicable into banking. And then for the second year, the team would focus on transitioning from the current system into the developing new system. So for software, hardware, and networking, the team would just continue on researching on how the current processes of the company would evolve into the new system. And for the database, the team would migrate the old system of the bank into the new system in a way that the new system could understand. And then for the people that are included, we are just going to ask for some feedback on them on what they see could be improved within the system. And then for the third and fourth year, the team would continue on developing subsystems to see what features could already be fully implemented, and also maintain and also perform scheduled maintenance to see if the features are still properly functioning together. And then for the fifth year, finally, the system should be already fully implemented, and customers could have a good system that they can rely on, and not depend on going to the bank anymore. They can freely use the bank's feature using their mobile devices, and do those processes within a few minutes.